How many of you would love to have a high income job? I'm talking investment banker money. And then have some kids and decide you want to replace your income so you could stay at home with them. Well, that is the story we are going to have from Kate Lynch today. I can't wait to dig in. Kate, how you doing?
I'm good, Michael. It's so good to see you.
Nice to see you as well. Kate, why don't you give a quick bio of who is Kate, your little bit about your story, and we'll just dig in.
All right, perfect. So I think I'm pretty typical for a type A personality, somebody who went through school always trying to be at the top of, at the top of my class in business school, trying to be an overachiever. Ultimately, I hustled my way into a job on Wall Street. And when I was there, it felt like it was the best job I could ever have. I was working a lot of hours, but the job was pretty exciting. I was probably working, 80 to 100 hours a week, but making $300,000, $400,000 a year. And I loved it. I was advising the CEOs of banks who were buying or selling other banks. I was helping them do multi-million-dollar capital raises. So it felt like the top of the world. And my husband and I built a lifestyle, something you talk about all the time, that just assumed I'd have that income forever. And um, because I enjoyed the job so much, I didn't see any reason I would ever want to stop. So much so that when I was 40 and expecting my first baby, I told my boss I would not take maternity leave because I thought, I'm used to working long hours. Yeah, I thought, I don't need so much sleep. This is normal.
No, it's
How's a
all
baby
good.
gonna make it harder? Yeah, no, it was a rude awakening. Um, he laughed just like you did, my boss. He said, "Well, why don't
Yeah,
you go ahead and wait and make that decision
yeah,
after you have the baby?"
yeah.
Um,
Take a time out. Take
So,
a time
like I
out.
said, I
Yeah.
was almost. Oh, go ahead.
No, I was just saying your boss is like, hold on, time out, time out. Yeah, yeah.
Yeah, yeah. No, so he was smart enough to tell me to make that decision later. But since I was 40 when I had the first baby, and I wanted a couple kids, we didn't have a lot of time. So we were lucky enough that we had three kids in 4 years, and then I found myself 4 years later with three babies at home. I was on the road 3 days a week. You know the story. I wouldn't see them, in the morning. I would leave before they woke up. I get home after they went to bed. They were being taken care of by a full-time nanny and an au pair who lived at my house. And it became increasingly clear to me that that lifestyle was less important than the kids. But we like the lifestyle, and I've heard you talk about how you and your wife, when you decided to go down the route to pursuing financial freedom, decided to cut back on living expenses and in order to cut corners and
Mhm.
find an opportunity to save. At that point in my career, I had about $1 million in a 401k, and I decided, I've got an MBA in finance. I worked on Wall Street. I have helped banks that were on the brink of failure manage to not fail. Surely I'm smart enough to figure out how to get this kind of income off of $1 million investment portfolio. And certainly listening to you, was a driving factor in that, as well as listening to other podcasts on real estate. But I decided at one point, I'm just going to make this happen, or, I'm going to try to make it happen. And if I fail, I can say I tried, rather than just driving around to these meetings and wishing my kids and wishing that I had done something about it sooner.
So when was that pivotal moment? How long ago did that epiphany? Because again, I remember when Olivia and I made that decision, right? We were both six-figure earners. By all accounts, we had the nice lifestyle, but we had very little left over at the end of the month. But again, we loved our jobs. The paycheck would show up the next week or whatever. We had all this stock stuff that would come and go. We're like, we're going to be good, but we ultimately had to cut back. So how long ago did you make that choice?
Yeah, it was in 2021, because I had moved to Cleveland. I moved from New York City to Cleveland. I was living in the Midwest. I was driving to meetings instead of flying. So I was listening to all of the podcasts on YouTube in my car. And one particular, the angst was growing. You know that feeling. I
Oh
want
yeah,
something different. It was building. As
the tug.
I'm sure any mom, with young kids has that similar feeling of, there's got to be a better way. But I listened to one podcast in particular, and the woman speaking was a single mom with two children. She was a waitress making $20,000 a year, and she wanted time with her kids. And she said she had bought real estate in Detroit. She bought 10 properties, and while she was doing the podcast, she said, "Now I'm home with my kids." And it just made me really look at myself through a different lens and say, if a woman who's, making $20,000 a year as a waitress, as a single mom with 2 kids in Detroit, if she can achieve financial freedom, then I should be ashamed of myself if I don't go after this, right? If I can advise these multi-billion dollar businesses on how to achieve their financial goals, what am I doing not achieving my own financial goals? And
Mm,
that really just changed my mentality. Something that a lot of motivational speakers will tell you. There's wishing it would happen, and then there's deciding to get it done. And that day, my mind shifted, and I said, "I'm going to get this done." And that what I went from dreaming and thinking to what you say all the time. I started doing the work.
yeah. It's I love this conversation because one of the I don't know if you've ever played the game Cash Flow from Robert Kiyosaki, but
Mm-mm.
essentially the game, in my opinion, because I've played it hundreds of times, the game is won or lost the moment you pick your career. Now, what do I mean by that? In the
Yes.
game, you pick a career, and the career has income levels and expense levels. And oh, by the way, the way you win the game is you produce cash flow that exceeds your expenses. So if you pick
Yes.
a teacher, let's just say the expenses are 3 grand a month, or you pick a doctor who's 15 grand a month, I'm going to kick your butt 9 times out of 10 as a teacher because my mountain or hill to climb is so much easier than a freaking $15,000 doctor. It's just everybody starts at zero and it's just easier. So I love the example of the waitress 20 grand. It only takes 10 houses. I'm going to guess it doesn't take 10 units to replace an investment banker's income.
Well, yes and no. So I completely agree with you. And but I also that was the message that I was hearing from you and others on the real estate podcast in general, which is that you can get 50,000 a year from real estate in a reasonably short period of time. And so, looking at my income, I felt that I wasn't sure it was possible, right? And I specifically wanted to go on shows like this to share this message with other people like me, people who are doctors, lawyers, business professionals making hundreds of thousands of dollars a year thinking, well, it's easier for them. It's funny because people making 20,000 a year think, oh, it's easier for somebody making $300,000 a year to replace their income because they have all that money. But like you said, if your lifestyle requires it,
It's
it's a lot
hard.
harder to take your kids out of private school than to never put them into private school, right? And my goal was to try to replace my income with real estate and not make the lifestyle changes.
Mhm.
I'm not saying that I was completely unwilling to do it. I decided to try to achieve that goal, and ultimately we got there without cutting back on the lifestyle. But I recognized that had I been a little smarter 20 years ago and not letting the lifestyle creep happen, I would have been able to retire earlier, maybe easier. At the same time, I'll say it's possible to get there. And I did max out my 401k every year of my, from the time I was 21, until I was 40. So I had that built up. But I wasn't investing in anything specific. I was mostly investing in index funds.
Mhm.
So I think anybody who maxes out their 401k from the time they're 21 until they're 45 should have a pretty healthy portfolio to start with there. And, just if you didn't touch it, right? And
Yeah.
so if you haven't done that, you're going to have a much higher hill to climb and you probably are going to have to cut back on expenses. But if you have been putting your max in your 401k and just getting the market return for the last 25 years, then there is a path to get you there. Is it easy? No, of course not.
Mm.
It took a lot of analysis, it took a lot of time, and certainly a lot of bumps along the way. But ultimately, the path that I chose is I'm investing in triplex properties in Cleveland, Ohio. And I put them all on Airbnb as short-term rentals.
Oh, okay.
So in Cleveland, an Airbnb, I'm sorry, in Cleveland, the long-term rental rates are around $1,000 a month for per floor for a
Yeah.
triplex. The short-term rental income is about $100 a night, and that's an average over the course of a year. It obviously is lower in the winter and higher in the summer,
Mhm.
but $100 a night averages out to $3,000 a month times 3 floors.
Yeah, with 100%
So my
occupancy.
properties get exactly, and but I'm saying like I'm just saying the average, right?
Okay, yeah,
Some
yeah,
nights
yeah.
I'm renting it $250 a night,
Oh,
right? So
I got you, I
my
got you.
average
Got it.
income across the year for a triplex is 7 to 11,000, right? I mean,
Okay,
some $7,000 months, I have some $11,000 months. That's
got it.
phenomenal, right? And these were properties that cost around, $300,000 to purchase.
All right. So, and again, so you made this choice to go after it pretty recently. We're talking the last 3 or 4 years.
Yeah, oh, yeah, 2021.
All right.
Yeah,
So you,
I bought the first property in July of 21.
so tell us about it. Well, did actually, before you tell me the story, did you know going in that you were going to do short-term rentals, or did you go going
No.
in? I don't, okay. Tell us about it then. Tell us that first one.
Yeah, so in all honesty, your book was a huge help, right? So I said, I'm going to get it done. I started getting all the books I can. I found your book, and I loved your philosophy of just buy the first one, right?
Mhm.
Because once you buy your first one, you'll get your second one, you'll get your
Yeah.
third. And when I read your statement that once you have four, it changes your life, I thought, yeah, that's right. That's what I'm going to do. I'm going to get four. It's going to change my life, and it absolutely did. But I started looking, like I said, I'm relatively good at financial analysis. So, and I also really resonated with your idea of something you can drive to. It doesn't have to be in your backyard, but you
Right.
want it to be something you can go look at, right? If you want to see the property. I'm a little nervous about the idea of long-term investing. I know people make it work. That risk profile didn't work for me. So I looked within about a 4-hour drive of our home.
Yep.
I was looking at, I used Mashvisor ultimately to look at short-term rental values. At first, I thought I was going to be doing long-term rentals because I didn't know much about Airbnb or short-term rentals.
Mhm.
I just started looking at what kind of rent I can get relative to the purchase price of the property. And I found that here in Cleveland, the cash flow on a triplex is better than the cash flow on a single family home. It's a little less per month, but you have 3 units, right?
Right.
And
Understood.
Cleveland is a market where there are probably thousands of triplexes. It's just a property type that happens to be available here.
Hmm.
So as I analyzed what property type would give me the maximum cash flow, I settled on the triplex in Cleveland. And then I started hearing about renting to, for example, travel nurses,
Yeah.
and recognizing we have a phenomenal healthcare system here in Cleveland. People from all over the world come here. And I thought maybe travel nurses would be my target audience. And then from there, it sort of led me toward hearing about using them for short-term rentals and Airbnbs. And I thought, what I'll do is I'll get the triplex. I'll furnish it with the least expensive furniture I could find. I literally bought some furniture from Goodwill for the first one. And I mean,
Yeah.
especially wood. I love wood furniture from Goodwill. An
Yeah.
old dresser, a nightstand, that kind of stuff is high quality.
Mhm.
You can clean it up so it looks beautiful, and it'll work in a short-term rental.
For sure.
But then I thought, well, I'll list it on Airbnb. I'll see how it goes. I'll market it to the travel nurses, see which one makes more money. And if it doesn't work out, then we just go the long term, the
Mhm.
rent. And within the first probably 2, 3 weeks, I was blown away by the amount of activity we had. I mean, it just started booking up right away.
Mm.
The prices I was getting and the occupancy rates were both higher than what I was expecting. And that first one did so well that within probably maybe 2 months or so of buying the first one, I went and bought a second one. And that first year, we had four altogether. Now, I don't want it to
Wow.
sound like it's all roses and butterflies. We had a lot of bumps along the way. The Being a nervous first-time investor, I made the mistake that a lot of people make, and that's I bought a place that was pretty cheap and needed a lot of repairs, thinking that was a better decision than buying a fully renovated place that cost twice as much.
Mm.
So our first place we bought for 180,000 cash. I knew it needed renovations, but it needed more than I knew. So we
Mm.
ultimately spent about $100,000 to renovate it. And after we finished renovations, I decided to get a loan on it, thinking I'd use that BRRRR strategy. But the appraisal came in at 235,000 on a
Ah,
property I had just spent $280,000 on.
yeah.
Which,
Yeah. Yeah.
yeah, it doesn't feel like a win. But
No, it doesn't feel
that
like a
property,
win.
no, it doesn't. But once I had the loan, my total invested cash was 100,000,
Okay.
and that place makes at least 50,000 per year of profit.
That doesn't suck.
So yeah, right. Yeah. So yeah, the 50% return on my cash investment is absolutely a win. And that's why, like I said, once that started renting, I started looking for other properties where I could do the same thing. And well, not the renovated. I find it's hard though. The Cleveland market tends to not, the long-term rental market tends to not require updated kitchens and bathrooms. A lot of them have sort of gross, either carpet or wood floor that hasn't been refinished in many, many years. They all have terrible plumbing and terrible electric. So when I've been a long-term renter in Cleveland back in my early, when I was in college, I rented a place. You have a window air conditioner unit. You have to turn it off when you blow dry your hair, or you'll blow a fuse, right? That's just, we all know that in Cleveland. But to put those houses on Airbnb, you can't have it like that. You have to update your kit if you want to be successful on Airbnb. So as much as I've tried to buy properties that are more renovated, I found I always end up having to do a lot of repairs, even on the nicer places, not quite as much as on that first one. But for example, we bought a place in March of last year, so about 10 months ago. And in this case, I at least went to the bank with the idea that I said, I'd like to get a construction loan on this house, or a renovation loan on the house. So you guys finance the renovations. That way I'm not just out of pocket all of the renovation costs on the house after putting 20% down, right? And the bank said, they'd be happy with that. They sent an appraiser out to look at the house. It was listed for, I think it was listed for $240,000. We had negotiated a purchase price of $230,000, knowing it needed a roof. Which is not cheap, and as well as completely new kitchens and bathrooms. The house was more than 100 years old, and the kitchens and bathrooms were 100 years old as well. So the appraiser came out, and he valued it as $230,000 as is, and $240,000 fully renovated.
What?
I was like, the roof alone is going to cost $20,000. How? I don't understand how that can be accurate. But the market value of the house might be $230,000. I guess they just assume that the buyer's willing to suck up the $20,000 roof replacement. House is so beautiful. I mean, I can't even tell you what a 100-year-old house. It has French doors from the living room into an office. It has a gorgeous front porch. I just love the place, but the bank said, sorry, we can't finance the construction on it because the after repair value doesn't justify it. So we were back in the same place, just saying, all right, well, if I can the bank actually, they were a little helpful on that. They allowed me to just put 15% down. Sort of, I think they were keeping the loan in-house anyway. So we put 15% down, and then just, had to finance all the renovations out of pocket. And again, that one, if anything, is doing better than the first one we bought in terms of the monthly. We've gotten there a number of 3-4 month renters paying $3,000 to $4,000 a month per floor. Wow. And so the finances make sense, even if you have to come out of pocket. And I describe it to people. I've heard a lot of people say there's an inverse relationship between appreciation and cash flow. And my concept is that it's true, so much so that here in Cleveland, the appreciation day one is actually negative, but the cash flow is equally. Right.
There you go. I like it. I like it. So I don't know Cleveland at all, so some of these questions may be crazy. What makes it unique that it could offer consistently $3,000 or $4,000 a month for shorter midterm rentals? What is it because of the hospital system? Is it because of universities? Where it seems like you
$100.
Yeah. Go ahead.
So if you think about it, Michael, $100 a night for a hotel is pretty cheap.
Oh,
right?
That's true.
I mean, if you're going to try to stay in a hotel, right, in a major city like Cleveland, I mean, you certainly are, like, you could stay at the whatever Econo Lodge at the airport for $80 a night, right? But you don't get much cheaper than $100 a night for a hotel. But you're not staying in a hotel. You're staying in the first floor of a 3-bedroom house. The 3-story house. It's you have your own kitchen and bathroom. You have either 2 or 3 bedrooms in each of the units. All of our third floors are a single bedroom, but for the first and second floor, you're getting 2,000 square feet of space. You have a living room. I always put cribs and rocking chairs in our places. People come with their family, all the time, because one of the family members is having a procedure done at the Cleveland Clinic, and they'll be there for 2 weeks or 4 weeks. And that you might have adult children with their children. They come in and out, so they'll rent the place for 2 months and they take turns coming in and out. For them, $100 a night for that place is a steal.
Right. Right. Okay. All right. So again, you got some is good, more is better. You found a strategy, you locked into it, 50% profit on the first deal. Love that cash on cash. What when did you get to the point you're like, okay, I can stay home. I can be a stay-at-home mom now. How fast did that come?
Yeah, so I was able to get an average of 50,000 annual run rate profit for each of the first four units. And then at that point, after we had those first four, because there's some time to do the renovations and the furnishing, all that. But I had the first four up and running about a year after I started, and then I just could see that we still had a lot of money available to invest, and I wasn't yet there on replacing the income, but it was a couple weeks before school started for the kids. So literally a year after I started, I quit the W-2 job. I stayed with home with the kids that summer and just took a little time to enjoy being with them. And then once school started again in the fall, I got back after finding some more properties and getting to the point where the income would replace the income I had before. And so we bought, like I said, our seventh house we bought just this last March of 2023, and finally got that one running this past June, to where it was renting as well. So now we have 7 places. They do average 50,000 a month. Summer is way better than winter, but ultimately, I'm at the point now where I have replaced the income, and I wanted to just put that out there to other people. The idea that you can replace that kind of income with real estate. It's not easy, but it's achievable.
Yeah. Again, now you have 7 buildings, 21 units, if I understand the math correctly. I'm assuming you have system and teams. You're not going to do the turns or cleanings or anything like that, I would guess.
So a little more detail. So I tried doing some vacation homes. I have actually 3 properties that are single family homes that are within a couple hours drive of Cleveland. One down in Hucking Hills, one in Ellicottville, New York, and one in Geneva, Ohio, thinking that the single family homes would make comparable returns, but just with one guest instead of 3 guests. As you know, the guests, they do take a fair amount of work. Ultimately, I actually found that I liked the triplexes better. That's why our 7th purchase was another triplex in Cleveland. As I'm running the numbers every year, looking at how much we make, the seasonality in the vacation homes for me has just been costlier than I anticipated. You have to reduce your price so much to get guests in the off season that it becomes not worth it on a house that, for example, if you have $1 million house and you're renting it for $300 a night, the amount of damage they can do isn't worth the $300 a night, even though it feels like the cash flow will be good.
No.
You get a group of 20 people staying in your home for $300 a night, that doesn't work the way I thought it would. I thought, even though I make, for example, the Hucking Hills house, we make $30,000 a month in the summer. That's revenue, not profit. But I thought, well, maybe if I make $5,000 a month in the winter, that'd be worthwhile. And ultimately, it hasn't worked. I'd be better just shutting it down. I figured then, they destroy the hot tub, they color on the walls, they, break a piece of furniture. Anyway, so the vacation homes, we tried 3 of them. But long story short, so we have 16 units in total across the properties. I do have a team that handles the cleaning. Each place that we've bought, we've been able to find people to do the cleaning, and those are 2 things you need. You need cleaners and handyman. And then I myself am answering the guest questions, approving the guests. There's a learning curve to figuring out who to decline. It's not perfect. Sometimes a bad guest sneaks through, but for the most part, that aspect of it I do myself. And I find that it probably takes me managing them somewhere between 2 or 3 hours a week, right? It's not a lot of time. The only real negative to it is that those 2 to 3 hours are usually not the time when you want to be doing that. It's either, when I'm trying to put the kids to bed, because they're trying to check into the house at, 7 o'clock on a weeknight, and the kids want me to read them a book. And my kids all know when a guest calls, mom has to answer the phone, and they know that mom gets to stay home with them because we have those guests, right?
There you go. So I'm curious, right, when you kind of play it forward, you've obviously probably thought of this, but let's put it out there. Given that those 3 homes maybe aren't working, have you thought about 1031ing out of those into other triplex, kind of move the equity? Or have you thought of that?
Yes. So great question. Two of them are on the market right now.
Ah, there you
um,
go.
I'm not sure. Yeah. And it's funny because I told you my Cleveland properties have zero equity in them and negative equity, if anything, or definitely negative equity. But the both the Hocking Hills house and the Ellicottville, New York house are probably worth a couple $100,000 more than what we what we bought them for, even 18 months later, just because those are markets that a lot of investors are buying in. So that relationship between the appreciation and cash flow has held up. They haven't cash flowed as well. They have appreciated very well. Rather than 1031, though, I'm actually another thing I did want to share with the type of people who might be pursuing this strategy. Something that I found that I wasn't expecting as I went down this path is that once I had the financial freedom, I was done buying houses and had time to do stuff. I found I started getting phone calls from people asking me if I wanted to get involved in things. And I had the ability to start playing, in professional roles in a small way, consulting or assisting in startups. And it's something that when I walked away from the investment banking job, I had a little bit of anxiety around leaving the career I'd built for 25 years. And I thought, it felt a little bit like a failure, even though my kids are worth walking away from it. I definitely felt that pull of, yeah, do have I, is it a mistake or just, is it, why am I giving that up? But I made that decision thinking I was walking away forever. So much so that I didn't even take my contact database with me, which I now regret because I realized that there were ways I
Yeah.
could have used that. But I thought, oh, I'm going to be, home with the kids, doing homework, making dinner. I don't need my contact database. No, I should have kept it. But anyhow, uh, this new ability to pursue professional roles in a consultative capacity or stuff that's just more exciting and fun without any of the pressures of the W-2 job, without a boss or any expectations around, if it works or if it doesn't work, is so incredibly exciting. I had no idea. I did love my job before, but it's a new way to love your job when there's all the fun and none of the pressure. So my older brother was a fintech entrepreneur, and he is incredibly talented. He sold 2 companies to Visa. And about a year ago, he reached out to me and said he had started a bourbon distillery as a passion project. And he said he sees an arbitrage opportunity in the bourbon space. And he said, he's a fintech guy. He thought this looked pretty incredible. He said, you're a Wall Street person. Just look at this and tell me if it's true. Is this as good as I think it is? And so we spent a couple months running numbers and scenarios and modeling. And at the end of it, I was like, this is the coolest investment opportunity I've ever seen. And so we're starting a private equity fund. We're going to raise 10 or $20 million. We're going to just, buy wholesale barrels of bourbon and sell them after 2 years. While I enjoyed raising money for the banks that were my clients, nothing compares to being in an investor meeting with my brother and having somebody, I mean, he's phenomenal, but it's to see him crushing it in an investor meeting in front of these investors who I have a high opinion of, and have them see the amazing skills that he has. It's so much better than
Yeah.
doing that with my bank clients. Not that I didn't enjoy helping them, but it doesn't compare to how it feels when you're doing something that not only is helping my brother, but it's also I'm one of the members of the company.
Sure.
So it's also something I didn't see myself as doing anything entrepreneurial, and I certainly would not pursue anything entrepreneurial that would take away my ability to spend the whole summer with my kids doing whatever we want. But this is a way that I can get involved in something on the terms that I'm willing to offer, the amount of time that I'm willing to give to it, and zero expectations around, what anybody else is telling me to do.
Yeah. The beauty of earning that financial freedom is powerful because you get to make choices and you don't have to
Mhm.
require the income, right? If it comes, it comes. It's great. Don't get me wrong, but you can chase
Yes.
impact. Chasing impact is a lot more fun.
Yeah, it is. When my brother first brought it to me and he and I both were unsure if it would work, first we just were trying to assess, is this something that makes sense? Would people want to invest in it? And we both came to the conclusion that we think so. And then he said, would you want to be involved? Do you want to help with it? And I said, yeah, I would. But he said, how much would I have to pay you? And I said, you actually don't have to pay me anything. I said, we'll go down this path together. And then if it works, I'll take a portion of the profit.
Yeah, you get a little piece.
I don't need income for the next 2 years. Yeah, it's just um, it's financial freedom, but it's also just like the concept of freedom is so much better than just the financial side of it. It's true freedom.
Yeah, true freedom. Yeah. Yeah. So let's talk to the moms and the dads out there. Let's pretend like they have the high incomes, the tech job, the finance jobs, the doctor, the lawyers, dentists, and they're looking at this and they're seeing a big mountain. What kind of advice do you have for them?
I'll tell you the first thing I tell every single person, and this is legit. I'm not saying it just because I'm talking to you. I tell them, get your book.
Oh,
Really and truly, one rental at a time that was that was the thing that convinced me, okay, I can handle one rental at a time. I thought when I started down my path, I laid out a plan that was going to take 5 years. And if it had taken 5 years, it would have been worth it. I mean, if it had taken 10 years, it would have been worth it, right? My baby, when I started, was 2. If I got to financial freedom when she was 12, that still would have been a good trade. I got there faster. I know I had a lot of resources to start with. I think there are a lot of doctors and lawyers who have a lot of resources to start with. But the number one step is, you got to get started, right? So start with the book. Secondly, of the people who have asked me how they can do what I did, and I'll say, okay, get the book, go, and they'll read the book and they'll call me and say, okay, I read the book. Now what?
now
The
what?
answer,
Yeah.
another thing
Now
you say
what?
all the time, now you have to do the work, right? So a lot of people who reach out to me sort of want me to do the work. And I say, look, God bless you. I'm glad that you like what I did. I'm not here to do the work for you. I don't have a day job for a reason. I'm here to, to motivate you, but not do the work for you. And it's I think there's work involved. I'm not gonna do it for you. Nobody's going to do it for you. But if you make that same commitment that I made and you do the work, it's possible. You can get there. And maybe it'll take you 1 year, maybe it'll take you 10. Hopefully, a lot of people have that 401k they can start with. For me, the 401k was the path. It doesn't, have to be that way, but it will go a lot faster if you've got that. If you don't have it, maybe it'll take more time, but it is still possible. It's not just for people who are making $40,000 a year to achieve financial freedom.
Yeah. The big thing I want high income earners to realize is I know a lot of you, and most of you pull out a spreadsheet and say, Michael, I can't get there. It's going to take me 212 units in 87 years. And I'm like, stop it. You got to get 1 and then let's get to 4.
Yes.
After that, we can decide what to do. But if you get to 4, worst case, you have more options later, right? Stop doing mental gymnastics that make it seem impossible. You haven't even done 1 yet. Why are we thinking about 217? I mean, come on.
And you learn as you go, right? I started down the path with the triplexes and I started thinking, oh, maybe the vacation homes are a better route. So I got a couple of those and then I said, oh, they're actually not doing as well as I thought. So, this strategy works in my market. I have a friend in Columbus who wants to do it, and they said there are no triplexes in Columbus. I said, well, I can't answer the question for you for what works in Columbus, right? That strategy works here.
That's your job.
So yeah, and I analyzed the options that are available within a 4-hour drive of me, and this is what I came up with. I'm not suggesting that everybody should come to Cleveland, just that you have to look within the options available to you and find something there. And if people want to do long distance investing, have at it. That's not my preferred path, but there are so many ways to get there. And like you said, once you get your first one, you'll learn how that one went. Maybe your second one is a slight pivot from that. Just do that first one and you'll have at that point the confidence to do a second one.
Yeah. Folks, at the end of the day, that is possible. It does take work. Sorry, choose your hard. Just choose your hard. What do you think?
I'm on board. I think that I'm really happy that I had a chance to say thank you to you because you were so influential on me getting down this path. I knew I wanted to do it, and I spent, just like everybody else, I spent a long time thinking about it and not doing anything. And once I took your advice, it worked.
No, shocking. Oh, that's awesome, Kate. Well, you've been amazing. You have been featured on Bigger Pockets. Could you tell us what episode number that was?
Oh gosh, I don't even know the number. It was last week. Yeah, it's just, telling the same story that it's possible, and specifically talking to the high net worth individual that you can achieve this too. And it's not, I think a lot of the real estate press out there is focused on people who have limited resources and telling them how to achieve financial freedom. And sometimes the people who are on the other end of the bucket sort of are left out of that conversation because there's the assumption that they already know what they're doing and they're getting good
Yeah,
financial advice, and that's not necessarily true.
not necessarily true. Not necessarily true. Kate, do you have an Instagram or a place we can send people to follow you?
Thank you. I'm on LinkedIn. Yeah, so the my LinkedIn handle is Kate Lynch Capital, and yeah, that's really that. You
That's where
know,
all the business people go. LinkedIn.
exactly.
All right, Kate, you're amazing. Keep doing what you're doing. Have some fun, and thank you for the story. It was wonderful. Take care.
It's great to see you. Thank you.
Mhm.